It's time now for a look at the day's top business news with Brian Quinn, starting in Washington, where the annual spring meetings of the International Monetary Fund and the World Bank are kicking off under the cloud of a global trade war.
Yeah, Oliver, the mood likely to be tense as those meetings get underway this week. Donald Trump's tariffs and their fallout on financial markets are likely to dominate the conversations around the central bankers and finance ministers gathered for the meetings in Washington. Trump's ongoing disruption of the global trade system has battered confidence among investors, business leaders, and consumers alike. The IMF and the World Bank themselves were set up in the wake of World War II to avoid the kind of global economic shocks that led to that conflict. Even their continued relevance could be at stake as the Trump administration has recently launched a review of the U.S.'s contributions to the two institutions. America is the largest stakeholder in both of them. The IMF's last global growth outlook was released in January. It projected global growth of 3.3% for this year and the next, with the U.S. economy predicted to grow by 2.7% and then 2.1%. An update to that outlook is due out on Tuesday. Those growth projections are almost certain to have been revised downward. IMF Managing Director Kristalina Georgieva says Trump's trade policies will hurt the global economy, but that the fund is not yet projecting a global recession. Here's Georgieva.
Ultimately, trade is like water. When countries put an obstacle in the form of tariff and non-tariff barriers, the flow diverts. Some sectors in some countries may be flooded by cheap imports. Others may see shortages. Trade goes on, but disruptions incur costs. Our new growth projections will include notable markdowns, but not recession.
And to India next, where hopes are high for a trade deal as US Vice President JD Vance touches down for a visit.
Indeed, Vance and his family landed in New Delhi not so long ago on Monday. The vice president set to meet with Prime Minister Narendra Modi later in the day to discuss a bilateral trade deal between the two countries. The U.S. is India's biggest trading partner. Trade between the two nations was valued at $190 billion per year. That is, though, before Donald Trump slapped 10% tariffs on worldwide imports to the U.S., while threatening 26% reciprocal tariffs on India if a trade deal is not reached. Modi's government has slashed its own tariffs on U.S. imports in a bid to placate Trump. After the two leaders met in February, Modi also pledged to buy more U.S. goods like oil, natural gas, and weapons systems in an effort to reduce India's nearly $48 billion trade surplus with the U.S. An eventual trade deal between the two countries would be expected to contain plans to more than double their trade to $500 billion per year. Washington is looking to India as a regional counterbalance to China as its trade war with Beijing heats up even further. The Vances are set to visit various sites around the country as part of a 4-day tour. Locals say the trip bodes well for their economy. Take a listen here.
Vice President Vance is not only visiting for a tour, but also to discuss various important issues like tariffs. I believe India-US trade will grow further in the future and that Vance will adopt a positive approach towards that.
And let's check in on the markets. How are they shaping up today?
So it's a mixed picture on the Asian markets Monday, with the Nikkei in Tokyo off by around 1.3%, with the automobile and pharmaceutical sectors leading the losses there. Chinese indexes, though, in positive territory after the country's central bank held interest rates steady, the yuan strengthening against the dollar after having lost ground over that U.S.-China trade war. The Hang Seng in Hong Kong gaining around 1.6% so far. Indian investors, meanwhile, casting an optimistic eye on that visit by JD Vance. The country's benchmark Nifty 50 index is up more than a full % in Mumbai.
And finally, for business, the chairman of French luxury firm LVMH is calling for a free trade zone between Europe and the United States.
So European luxury goods have already been suffering from these trade tensions with the U.S. LVMH CEO Bernard Arnault says the industry will be badly damaged if the situation continues. Arnault taking Trump's side a bit in the dispute, as he says it will be the EU's fault if no solution is found. But tariffs and falling sales may be the least of his problems. Luke Schrago has the details.
A potential 20% tariff on European fashion and leather goods is no joke for LVMH. The luxury conglomerate's CEO, Bernard Arnault, wants trade tensions with the United States resolved and had a stark warning for Brussels at an annual shareholders meeting.
If we end up with high tariffs, well, indeed, we have a part of our production that is done in the United States. We will be led to increase our American productions, inevitably to avoid tariffs. If Europe doesn't manage to negotiate intelligently, they will have this consequence in many companies.
Europe, though, has been pushing for a zero-for-zero tariff arrangement with Washington to little avail. LVMH did open a Louis Vuitton workshop in Texas during Donald Trump's first term, meaning it could sidestep some of the US levies if they snap back in 3 months. But production problems have meant it's consistently been among the firm's worst-performing sites. What's more, LVMH also recently lost its position as the world's #1 luxury firm to rival Hermès, after first-quarter sales went poorer than expected. This as protesters outside the meeting took aim at the luxury sector, demanding its chairman, worth over 150 billion euros, pay his fair share.
There's no doubt that LVMH, and Bernard Arnault in particular, as the group's CEO, truly embody this sense of opulence and the desire to carry on as if nothing were happening, while the planet burns and inequalities continue to grow. It's absolutely unbearable.
Arnault retains the shareholders' trust, however. They voted to allow the 76-year-old to continue running LVMH until he's 85.
Bernard Arnault got some worries there, but I think he'll be all right in the end, actually, Oliver.
Probably will.